What's up, guys? So today we're going to be talking about multiple time frame analysis. All right, so in Forex or in trading period, you don't want to get tunnel vision on one time frame because one time frame only gives you so much information. You need to be able to look at the bigger picture, the medium picture and the small picture. All right, now as you learn in the candlestick lesson, each depending on what time frame you're on determines how much time each of these candlesticks represents. So since we're on the 4-hour chart right now, each one of these candlesticks represents 4 hours of time. So it takes 4 hours for each of these candlesticks to form, right? So if you look at the time period of this chart, it goes from the 17th of July all the way through August to September. I mean, this chart shows a couple months time because each of these is 4 hours, right? So each time frame has its own trend, and you want to remember that, right? Just because you're on a downtrend on the 4 hour does not mean that you are going to be on a downtrend on every other time frame, right? Depending on what time frame you're on, you may, right? Because think about it, you're on a downtrend on the 4 hours, so you have you have price putting in a high, a low, a lower high, lower low, lower high, lower low, lower high, lower low on the 4 hour chart. But if you zoom in to say a 1 hour chart or a 15-minute chart, this this retracement on the downtrend is actually an uptrend on a smaller time frame, like that, right? So an uptrend on the 15-minute chart is or the 1 hour chart may actually be just a retracement on the 4 hour chart. And this downtrend on the 4 hour chart may actually be just a retracement on the daily chart. Maybe our daily chart is moving up, right? And then this 4 hour downtrend is just a retracement on our daily chart. You see how that works? So every time frame has its own trend, and what you want to do is correlate your time frames so that you're trading with the bigger picture, whatever you choose your bigger picture to be. So if your bigger picture, let's say your bigger picture is the daily chart, then what you want to do is you want to pick 3 or 4 major time frames to use. So let's say you're going to use the daily as your bigger picture. So here's your daily trend, okay? Make an uptrend, right? And then on your daily chart, it starts to retrace. Now your daily chart is still in an uptrend. So from here, from this point, we know that if it's an uptrend, price can only retrace within this area for it to be a valid uptrend. If it breaks this area, it's going to become, it may become a downtrend. So we know that somewhere in this zone, price is going to retrace to, right? Now you learned about Fibonacci, so you can draw swing high to swing low, pick a level, and then use your other tools, support and resistance, and supply and demand to kind of figure out where it may reverse from. But let's say price is retracing. Well, that retracement is going to be a downtrend on the 4 hour. So let's say you have an uptrend on the daily, but you have a downtrend on your 4 hour chart, right? Are you going to want to trade up? Are you going to want to trade long? Well, long term, yes, you do want to trade long because the daily trend is long. But you want to enter once the smaller time frames are also trending up so that you don't have a lot of drawdown. So if price retraces to this point and then it makes, let's say, a double bottom and then it breaks the structure and starts trending up, now since your lower frame is in correlation with your higher time frame because now your 4 hour chart is in an uptrend, right? High, lower, or high, low, higher low, right? And your daily time frame is also in an uptrend. Now your probability factor, your probabilities that, hey, if I enter here, there's a higher probability that price is going to start moving up. in conjunction with the bigger time frame, there's a higher probability for that to happen than for price to continue down from there. And that's all trading is probabilities. No one can predict the future, but you can guess with some probability on your side that, hey, that's what price may do, right? So now that we've covered that, so and then obviously, you can break it all the way down to smaller time frames. So yeah, you have a uptrend on your daily, you have a downtrend on your 4 hour. The 4 hour on the 4 hour time frame, it starts to turn into an uptrend. Then you could zoom into your 1 hour and 15-minute time frames and wait for those to turn into uptrends if they haven't already, and then you can get an even better entry. So let me remove these drawing tools, and then we'll apply this to an actual chart. So let's go to the daily chart, right? What do we have on our daily chart here? Okay. Let's just take this area for an example. Okay. So we have an uptrend. Well, it's a downtrend now, but we had an uptrend on our daily chart, right? We had previous structure broken here, right? And we have price moving up. So as price is moving up, we know, okay, we're in an overall uptrend on this area of the chart. So if we zoom into our 4 hour time frame and go to that area, okay, now we can see a little bit more detail. We can see what's going on our charts. And we have price on the 4 hour chart violated our structure here. So once it violated our structure with this here, now we're going to be looking for a retracement on the 4 hour to enter it so that we can continue on our daily uptrend that was created here. And as you see, price started uptrending on the 4 hour chart. So we caught that big daily move by going down in the 4 hour chart, right, and waiting for an entry down there. Now let's say this 4 hour chart is moving up. Let's go down the 1 hour chart and see what that's doing at that area. Okay. So if you're on the 1 hour chart, you have a lot of movement up, and then you have this little small trend going down, right? But on the 1 hour chart, I mean, swing high or swing low to swing high, that was about a 38.2 retracement right there. And if you break it down even further, I mean, it gets, let's go down to the 5 minute. You're gonna see a downtrend in those areas, right? So a lot of scrolling. Got a small area here. Doesn't help that my internet's kind of slow right now. See if we can find this on the chart. Should have just looked at the date. That would have helped. What we got right there. Okay, so this is for the birds. Alright, but you get the point. Let's see. Go back to here. Let's see. Okay, so we were at May 16th, 2017. So let's go here. Go to May 16th. Okay. Let's see if we can get the 15-minute data from back then. Sheesh, why is this going so slow? This is crazy. One second. Okay. All right, so here we are. Sorry for the little delay. Okay. And so we have, if you look, we have an overall uptrend on our daily, 4 hour, 1 hour. But I mean, check this out right here. On 15-minute chart, we have a little downtrend here, right? So you want to always be aware of what's happening on your lower time frame, because if you would have entered up here to go long, you would have been getting some drawdown here. You know, you've been minus some pips. Let's see how many pips that was. 50 pips. I mean, that's a lot, right? So if you had this downtrend on the 15-minute chart, and that's part of your time frames that you look at, you would have wanted to wait until this 5-minute chart broke out of the structure and started creating an uptrend, which happened here, right? It broke out at that point, made a new high, right? And once it made that new high, now you can start looking, okay, here, it's Fibonacci, right? We got some structure down here, right? We got this level here, got this level here, got this level here, right? So price came down, reversed off our 78.6 level, which was in the same area as all these rejections here, right? And then price started moving up. So a buy position would have been great somewhere down here, right? Because once you bought it down there on the 5-minute chart, you go back and look. It's on your 1 hour, on your 4 hour, on whatever chart you're on, and we go back to our daily. Okay, something must be going on because my internet is really tripping right now. Yeah, I mean, look at all this crap down here. But we bought, that means we would have bought down here. We bought way down there because we utilized our smaller time frames and caught this larger trend up. Alright, so that's multiple time frame analysis. I hope that it made a lot of sense. Of course, you know, you can always hit me up, ask me questions. But the main thing to remember is that every time frame has its own trend. So you want to make sure that, you know, that if you're in a major trend, you know, if you're in a larger time frame trend, the higher the time frame, the more powerful it is. So you always want to go in the direction of the higher time frames. So if you have a large time frame trending up, and then there's little mini trends, you know, you don't want to be, unless it's a huge time frame and you're trading, you know, on the way down. But you want to wait for the smaller time frame to start trending up, you know, for you to get in on the larger time frame. All right, so that's multiple